Hi everyone, my name is Busari Abiodun. Welcome to my channel. This is my continuation of the tutorial on manufacturing account. If you remember in the first part of this tutorial, I discussed about what manufacturing account is and also explain the various expenses, that is the various costs in manufacturing account, which are the prime costs, overhead costs, and work in progress. So just like I said, I'll show you the format of manufacturing account. This particular video, I'm going to take an illustration that is a question of manufacturing account, and I will be preparing the solution to that question. So let's look at the question. So we have Fadward Enterprises, a manufacturer of school bags operating in Ibadan City, Nigeria, has the following balances for the year ended 31st December 2022. Raw materials as at 1st of January, 10,500 naira. Work in progress at the beginning of the year, 4,000 naira. We have purchase of raw materials, 45,800 naira. Carriage inward, 3,500 naira. Return outward is 2,000 naira. Manufacturing wages, 5,000 naira. Depreciation on plant and machinery, 6,000 naira. 4 months salary, 3,000 naira. We have factory power, which is 2,000 naira. Advertisement is 5,000 naira. Factory rent, 2,000 naira. Raw materials as at 31st December 2022 is 7,000 naira. Work in progress as at 31st December 2022 is 2,500 naira. While we have office expenses, 6,000 naira. You are required to prepare manufacturing account for the year ended 31st December 2022. So we are going to prepare the solution for this question. So just like I said, so the first thing we put the heading manufacturing account for the year ended 31st December 2022. Then the next thing we put the unit of measurement. If it is dollar, we put dollar, but in case of this question, it is naira. So we put our naira sign. Just like I said, manufacturing account has its format. So the first thing is opening stock. Let's go to the question. So we have opening stock. We were given raw materials as at what? 01/01/2022. That is as at 1st of January 2022, which is 10,500 naira. So we have our opening stock 10,500 naira. Like I said, after opening stock, the materials that are available, the next thing is what? Purchases. Let's look at the question if we have purchases. So we have purchase of raw materials, which is 45,000 naira. So add purchase of raw materials 45,000 naira. After purchase, like I said, when they purchase item, they carry it into the factory. That is carriage inward. Look at the question. Do you have carriage inward? Yes, there is carriage inward in the question. So carriage inward on raw materials 3,500 naira. So we have carriage inward 3,500 naira. So 45,000 naira plus 3,500 naira, that will give us 48,500 naira. When they bring the material, if there is any damages, that means they will return it back to the supplier. Let's look if there is question on return outward in the question. So we have return outward on raw materials 2,000. And take note, at times you may be given a comprehensive question where you'll be asked to prepare manufacturing account, trading profit and loss account. So when you see carriage inward or any information that has to do with manufacturing account, it will be stated carriage inward on raw materials. But if there's no raw materials, that means it's talking about carriage inward on finished product. So take note of that. So this one is carriage inward on raw materials 2,000 naira. So we are going to deduct. So less carriage inward 2,000 naira. If we subtract 2,000 naira from 48,500 naira, so that is going to give us 46,500 naira. So if we add the two together, 10,000 naira plus 46,500 is going to give us 57,500. If you remember, I said this amount is called what? Cost of raw materials available. That is the total amount of material that is available in the factory. After that, the next thing is to do what? We look closing stock, less closing stock based on the format. So there's information about closing stock. We have raw materials as at that 2nd December 2022. At times, it will not be the year. They will tell you closing stock at the end of the year. So it's still the same thing. So 31st December, which is 7,000 naira. So we said less closing stock, 7,000 naira. If we subtract 7,000 naira from 57,000 naira, that is going to give us 50,000 naira after we remove the closing stock from the materials available. So the balance we are going to have is what we call cost of raw materials consumed or cost of raw materials used. So which means the total amount of raw materials used for production that year is 50,000 naira. So we are done with raw materials. Just like I said, if you remember under the format, I said direct materials, direct labor, direct expenses. So we are done with direct materials. Then the next thing is direct labor. To get our prime cost, do you have any information about direct labor? Let's go to the question. So we have manufacturing wages. It's a direct labor, which is 5,000. So we are going to add that. So direct expenses, if you remember, I said direct expenses. I gave you an example like royalty, and I explained what royalty is in the first part of this video. So let's look at the question. Do you have any information about direct expenses? So if we look at it, we have work in progress because we are static. All the one we have treated, we have depreciation on plant and machinery, foreman salary, factory power, advertisement, factory rent, work in progress at the end of the year, office salary. There's no information about direct expenses like royalty. So which means we are going to skip that. So let's add it together. 50,000 naira plus 5,000 naira. That is going to give us 55,000 naira, which means our prime cost is going to be 55,000 naira. So just like I said, we have direct materials, direct labor. In the case of this question, we don't have direct expenses, so we had everything together. We had 55,000 naira. So that is our prime cost. When I was explaining, I said after prime cost, then the next thing is what? Factory overhead, which are indirect expenses. So factory overhead cost. So let's go to the question. Let's look at the indirect expenses we have in the question. So if we look at it, we have depreciation on plant and machinery. That is the first one we have, which is 6,000 naira. So depreciation on plant and machinery, 6,000 naira. Let's look at other indirect expenses. So we have 4 months salary. So 4 months salary is 3,000 naira. It's also an indirect expenses. 4 months salary, factory foreman, 3,000 naira. So we have factory power, 2,000 naira. So factory power, 2,000 naira. Then go back, we have advertising. If we look at it, this is advertising. Does advertising has anything to do with factory? No, which means expenses like this is selling and distribution expenses. It will be excluded. So anytime you are given a question on manufacturing account, you should be able to identify all those items that belongs to the manufacturing section. Any items that does not belong to the manufacturing section will not be included in the preparation of the account. So advertisement will not be part of the entry. So then after advertisement, we have factory rent. So factory rent is an indirect expenses that falls under the factory expenses, which is 2,000 naira. So we have factory rent, 5,000 naira. Then the next item, so we have work in progress. That's what you have. So then after work in progress, we have office salaries. It's also the same thing. Office salary, there's nothing concern manufacturing with office salary. So in that case, office salary will also not be included under the expenses. It will be an expenses under trading profit and loss account, not under the factory section. So which means that is all about the indirect expenses we have. So we go back, we close the account, then we had everything together, 6,000 plus 3,000 plus 2,000 plus 5,000 naira. If we had everything together, it's going to give us 16,000 naira. So we have our direct prime cost, we have our factory overhead. Then the next thing, if you remember, I said plus net work in progress. So the next thing is that we should add opening work in progress and subtract closing work in progress. Let's go to the question. Do we have information about work in progress? Yes, there is. We have work in progress as at 1st of January 2022, which is 4,000 naira. So opening work in progress, 4,000 naira. So now with less closing work in progress. So our closing work in progress is 2,500, and that is work in progress as at 31st December 2022. So less closing work in progress, which is 2,500 naira. If we subtract 2,500 naira from 4,000 naira, that is going to give us 1,500 naira. That is all the information we have from the question. So if we add everything together, 55,000 plus 16,000 plus 1,500, that is going to give us 72,500. So this amount represents our cost of production. So that means the cost of producing for the finished product is 72,500. So that is all about preparation of manufacturing account.